Assalamu alaikum. Students, today our topic is fixed deposits or term deposits. So fixed deposits, this is also called FD, fixed deposits, is a financial instrument provided by bank to investors at a high rate of interest than a regular saving account until the given maturity date. Fixed deposit account is the instrument which is provides to investors, to those investors who are interested in the high interest. So banks accept their investment at a high interest rate. It may or may not require the creation of separate accounts. And keep in mind, no checkbook that is assigned to the fixed deposit holder. Why? Fixed deposit, as its name indicates, are term deposits. That is such an account that in this accounts the account holders fix a specific sum of money for some specific period of time at high interest rate. So this is a major sources of the funds for the commercial banks, because most of the investors wants more returns. So they make investment instead of current account, instead of saving account, or instead of profit and loss sharing account. They make investment in fixed or term deposits account. Fixed or term deposits, as the name implies, it deposits which keeps with the banks for a fixed period specified in advance. At the maturity of the loan, the bank pays the principal amount along with the interest of the said period of time. In Afghanistan, Azizi Bank, they are providing the some terms and conditions for the fixed deposits. That fixed deposit account can be opened in UFs as well as in the USD dollars form. The minimum periods for fixing the amount is 3 months or 90 days. Maximum periods for the fixed deposit is 5 years. Minimum amount that should not be less than 10,000 or 300 USD. If your account is in dollar, so minimum balance is $300. And if your account is in dollar in UFs, so up to minimum amount will be up to 10,000. This account can be opened individuals, that can be opened by firms, by corporate levels, by NGOs, each and every person that can be opened. So fixed or term deposits is its name indicate, dear students, that like you wanna open a fixed account, so you will fix money for the fixed period of time. Like you have 1 lakh UPS, you want to fix it for 1 year. So now for 1 year you don't have the right to make further deposits as well as withdraw that money. Yes, you can withdraw that money before the time period, but some penalty charges you will pay. High penalty charges will be charged by the bank. So that's why on the due to these properties, the name of these account is fixed or term deposits. This account can also be opened by a minor. Minor means that customers who have the age less than 18 years, but with the proper guardians, with legal guardians, or that is called co-applicant. And total operation will be done by their legal guardians, and a minor can open this accounts. Now, what are the positive points of this account? Yeah, we can say that advantages of the fixed deposits or term deposits. So this account is suitable for those who expect to have huge surplus amount for a long time, and they need no need for their saving amount. So they can open this account. Means that this account is suitable for those persons who have surplus money and they need no need for that surplus money. This account is not suitable for the businessman. This is suitable for the individual persons and for that persons who have the money and who don't need for the long period of time, so they can fix the money. Rate of profit. This is another one positive point. A high rate of profit or high rate of interest offered by the bank is compared to saving accounts. And the rate of the interest is increasing as time period are increasing. Another one positive point of this account is security of loan. Bank accept the amount of this account is as a security for granting loan to account holder. Look it. Now, you open the fixed account for 3 years with 3 million Afghani. And let's suppose after 6 months, now you want to take loan from the bank. 1 lakh Afghani, you want to take loan. So you will take loan without any security. Why? Because you already have the 3 million Afghani with the bank. So bank consider that as an security. This is another one positive point, that if you have the fixed deposit account, so up to that limit of that amount, you can take loan from the bank. Interest that should be chargeable on that loan. You will pay loan. You will pay interest on that loan amount as well as payments of the profit. Normally profit on this account, interest, I'm talking about profit, so profit means interest here. Profit or interest on this account is paid after every 6 months, but it is dependable. Dependable means some banks, they are offering the interest annually basis, some semi-annually basis, and some quarterly basis. So it depends upon the policy of that bank, that how they decided and how much after how much period of time they are giving the interest on this account. Negative points of this account is the fixed periods and the drawings rules. Fixed periods means this account is always open for a certain period, for a specific period, which is determined at the time of the opening accounts. And during that period, we can't make the deposits further, and we can't withdraw the amount. That's why fixed period is showing the negative points of this account. Like if I have 1 million and I want to open a fixed deposit account. So in advance I will specify the amount is the time period that for how much long times I can keep this amount and how much money. Next one is drawings rules or withdrawal rule. The depositor can't withdraw the money before the expiry of the fixed period. But in case of earlier withdrawals, bank does not pay any profit. And similarly, they are also charging some penalty charges. Look at, if I deposits the money $1 lakh for 3 months, yeah, for 1 year, yeah, for 2 years, or for 3 years. So until the maturity of that not comes, I don't have the right to withdraw the money. If I withdraw the money before the maturity, so bank will not give the profit for that session, and simply they will also charge some penalty charges. So these was the negative points of this account. Hope you will understand. Now we will proceed for the next account, that is called foreign currency accounts. As its name indicates, foreign currency account. So this account will be in shape of foreign currency. Like that account should not be in the Afghani. That should be in the dollar, that should be in the pound, that should be in the euro, that should be in the Kuwaiti dinar, that should be in the Saudi riyals, whatever. What is the main purpose of this foreign currency accounts? So the main purpose of this account, by introducing the various reforms in the strengthening of the foreign exchange reserve. The main purpose of this account is to increase the foreign reserve of the country. This account is open mostly in the foreign currency instead of the local currency. For example, if in Afghanistan you open this account, so you can't open this account in Afghani. You can open this in other currencies. Clear? Such accounts can only be opened in nominated branches of that banks. All banks not providing this facility. Specified banks at specified branches, they are providing this facility. So foreign currency account can be opened in form of saving account, in form of fixed deposit account, and similarly in form of current account as well as. No zakat and no tax that are deducted from this account. Why? The reason is that one, that foreign currency account is to boast of the foreign reserve of the country. So that's why no zakat being in the Muslim countries, and similarly no tax that is deducted from such an account. The reason is that one, that this is the policy of the state bank, of the Federal Reserve Bank, or we can say that of the state bank, that to enhance the investors, to make investment, to open the accounts in the foreign currency, to increase the foreign reserve of that country. The main purpose of this account is what? To increase, to push up the foreign reserve within the country. So that's why no zakat and no tax that are deducting from such an account. Just like the current accounts and the profit and loss are saving accounts, this account also have some positive points, or we can say that advantages, and also have some disadvantages as well. So what are the positive points, or we can say that advantages of the foreign currency accounts? So profit is paid in the same currency in which the account is open. Payment of profit is the advantages. Like if you open the account in dollars, so the interest which should be offered to you, that will be in words, in dollar form. If you open the account in euro, so interest will be given to you in shape of euro. Clear? Then free from tax. This account is free from tax, means that no tax is applicable, no tax are deducted from such an account. Exempt from the income and wealth tax. This is a positive point. Investor want this one, not to pay the taxes. When you pay the taxes, that is considered as an expenses. No zakat deductions. No, being like if you are in Muslim countries, you are a Muslim, so in Muslim countries they are deducting zakat when the holy month of Ramzan is coming, so from each and every account they are deducting zakat. But in case of the foreign currency account, bank not deducted any kind of zakat. Then nature of account. This account can be opened in the form of any account, like if you are not interesting in the interest, so you can open it in current account shape. You can open it in saving account shape. You can open it in the fixed deposits account shape. You can open it in the profit and loss account sharing account shape. So these are, it means that there is no restrictions. So these are the positive points of these accounts. What are the negative points? So in few foreign currencies, this account can be opened mostly in few foreign currencies. So this is a negative points. For example, mostly in the dollars, Japanese, in the German mark, yeah, nowadays that is euro, this is Britain pounds, etc. So in the well and stable currency only that is open, not in all of the currencies of all of the countries. Second negative points of this is specified branch. This account can be opened in specified branches of the bank, not in all branches of the bank. So these two are the negative points of these accounts. Next one and last one is joint account. Joint account is that account which can be opened by two or more than two persons. For this is a condition that when we are going to open a joint account, so a single person can't open this account. At least there should be two, and minimum numbers of the account holder will be two, and maximum may be any. So a joint account is a special bank account which is opened in the name of the two or more than two persons. So at least two persons should be the customers of this account. The deposits of money can be done by anyone. Now look at, if we are 4 personal or 3 personal and we open the joint account. So look at, anybody can deposit money in this account. There is no restrictions in the deposit. But at the time of withdrawals, all the joint owner signature must be present on the check. Like, look at, if A, B and C open the joint account, and in case of drawings, if someone want to withdraw the money now from this account, so the signature of all these three personals, A person, B person and C, must be on the check. If the signature of the A, B is present but the C is not present, so bank will not cashable that check at cash counter. Why? One person signature is missed. Yes, in case if all the three personals co-joint account holder, with that can say that joint account holder, if all these three decided that if the signature of all of us is not present, only the signature of A will also can work, and in the written they are present their statements to the bank. So though now in this case they are exempted from the signatures. This account is open for what purpose? For the control purpose. Mostly in businesses, joint account are open for the controlling purpose, that the owners or the co-owner or the partners, they know about the all the cash transactions from the bank side, they should know. So that's why mostly this can also be open within the family. For the internal controls. Clear? So joint account is also an options that is given by the bank to their customers, and the main purpose of this is what? That is for the controlling, and similarly there is no restrictions in deposits case, but restriction in the case of the drawings. At the time of the drawings, the signature of the all co-owners, we can say that all the joint account holders are mandatory. This joint account can be open in current account shape, in saving account shape, in profit and loss account shape. So dear students, hope you will understand. So this was our today lectures. So if you have any problem in the explanation, so you can drop or ask questions in your WhatsApp group. I will try my level best to give you the satisfactory answer. Please kindly ask question, because asking questions, that is your right, and giving answer, that is our responsibility. So I hope so that you will understand from the types of the bank accounts. So I am giving you a quick review that we have the different types of accounts, like current accounts, then saving account, profit and loss account, fixed deposit account, and the joint account. In the current accounts, there is no restriction on the deposits, and similarly no restriction on the drawings, and there is no concept of the interest. Neither bank offer interest, neither the customer are demanding for interest. In the second one, in the saving accounts, there is a concept of the words of the interest. Third one is the fixed deposit account. So in fixed deposit accounts, the customer can fix the amount of money for the fixed period of time, and a huge interest they are charging on it. Bank offer a high interest on the fixed deposit account. There is no restrictions. There is restrictions in the deposit as well as in the drawings. Once you fix the account, you can't further deposit on it. Similarly, no drawings on it. Yes, you can make drawings from such an account, but with penalty charges. Profit and loss sharing account. So this is for those customer who wants to share profit and loss with the bank. So they make investment in such an account, and the bank, they are use their money in the different projects, and on the basis of that project's profit and loss, the shares that should be given to the account holder. There is restrictions in the case of drawings and no restriction in case of deposit on such an account. So if you withdraw the money in such cases, so will provided a 7 days prior notice to the bank, and after that bank will allow you to withdraw the money. The last one is the joint account, as its name indicates. So at least there should be 2 account holder or more than 2 account holder. This is open for the internal control. Yes, there is no restriction here in case of the deposit, but in case of drawings, the signature of all the account holder must be on the bank account. So hope you will understand. Bye. Have a good time.